Good evening. It's Vijay here. Welcome to this weekend podcast. As I promised, I am just giving you an overview of the week which we went through, and also some things what we can look forward to the week ahead. So we had a very volatile week last week, and this was a very volatile month, and we saw huge swings across the board. So much so, in case of, for instance, Nifty, we saw about a 2,500 point swing. I'll just share with you the chart so that you can yourself visualize what kind of swings we had. So here we are. In the Nifty, for instance, we had a swing of about 2,500 points. And then if you take Bank Nifty, we had a swing of about, no, sorry, in Nifty, we had a swing of 800 points. And in Bank Nifty, we had a swing of 2,500 points. If you look at mid cap, let's get to mid cap. So that was 1 minute that here. So in mid cap, okay, I don't know why it's not coming. Now let me try to share again. Yeah, in mid cap, we had a significant move between 1st March and the last day of March, and this was a swing of about 4,000 points. And then in the small cap, we had a further swing of about 2,200 points, and in the micro cap, we had a swing of about 3,300 points. If you observe in the Nifty, for instance, we had the market bottoming out on 20th. Same thing vis-a-vis in the case of Bank Nifty. Whereas in mid cap, we had the bottom happening sometime in 13th, 14th of March. And then small cap also, we had a bottom around the same point, same time. That was about 13th, 14th March. And then micro cap too, we had a bottom around that time. The reason why 13th, 14th was very significant was because this was just in line when the advance tax due became due. Of course, the Nifty and Bank Nifty took a little more time because probably the big players were waiting till the end of the month. The last day of the month was very hectic, as we all realized and as we all participated, and that was quite something which was something to behold. Now, as far as the institutional numbers are concerned, it was a spectacular month where FIIs, for instance, bought about 32,000 crores. This is a record buying in a single month. DIIs topped them by buying about 53,000 crores. So between them, they bought about 85,000 crores. This is an all-time record. Now compare and contrast this with the SIPs, which is about 18,000 crores, which DIIs get. So when we get excited with SIPs of about 18,000 crores, think about it that 53,000 crores were expended by the DIIs in just this month. So there is sufficient supply wherever the demand is there. So the markets really didn't move much during this month. So it means supply meets demand. And what was also noteworthy was many of the small and micro cap stocks did not go back to their February highs. Some of the stocks in Nifty did make new highs, but by and large, most of the micro caps and small caps, they are down by about 30 to 40%, which is something to be concerned about because if in the next 15 days, if the market does not pick up, then you see there could be a bailout across the board in the small and micro cap. As far as we are concerned in the large caps and the Nifty and Bank Nifty, we are safe because they are well within the range. In fact, Nifty almost went to an all-time high on Thursday, but failed to breach it, and then it fell off. So that is as far as the what happened last week. So going ahead, what can we expect is that next week is a results week. So results week starts from next week. The elections start from 19th of April. So there is still time for the election volatility to begin. I will be doing a special session next week on how markets have behaved during the elections. And this is a very interesting feature. It is not as simple as people make it out to be. It's very, very complex, but there is a pattern. And we will go through the charts since 1991 and try to discern what the pattern is and what can we expect based on what has happened in the past. Now, I keep repeating that gold and silver are doing well, and I don't know how many times to repeat, because you see, we are, as far as the equity markets are concerned, we are overbought. And now, as far as gold and silver is concerned, probably we are at the bottom of the cycle. And so, how much can gold and silver go, for instance? So, just let's look at the gold prices on Thursday. Gold went on to make an all-time high. It broke the previous all-time high of 2022, 22, that is $2,222, and it has closed around $22,033. Now, I had pointed out that there is an inverted head and shoulder in gold, which the minimum target was about 2,550. Please note the keyword is minimum. And more important is, in these times, you need to select stocks or currencies or commodities or any asset class which will give you a very high return possible with a low risk. So right now, in my analysis, gold and silver are at the same place as what the PSU stocks were in December of 2022. And there was nobody to look at PSUs at that point of time. And then if you take the PSEs, for instance, you see here, before Modi ji gave the buy call, you see at PSEs in December 2023, 2022 was about 4,183 was the index. And then you see it went up to, it almost doubled within a year's time. So I won't be surprised if gold does that in a year's time, whether it may go up even more than 75 to 90%. Has it happened before? If you go back to 2011, when it last peaked out, you see gold moved on from as low as some 1100 to about 1900. So about 80% move was there in gold in 2011. That is in just, I would say, in about 8-9 months. So gold has got that capability of going 80-90% in just 8 to 9 months. The interesting part is silver. Silver has not yet made a new all-time high. Silver is sitting at below $25, and above $26 is where the inverted head and shoulder will form. And that once silver starts going, it goes faster than gold. I'll just give an example. If you look at what happened in 2020, in March, silver was at around $11. By August, it had gone to $29 to $30. So you can say it went up by 2.5 times within a span of 5 months. Silver went up 2.5 times within a span of 5 months. So that is the kind of momentum silver has when it catches a bid. And I am fairly confident that silver will catch it. Gold is leading right now, and we should see significant moves in both silver and gold. As far as my analysis is concerned, please note that I am not a SEBI registered advisor. Please take your own, do your own due diligence, and please like, share, and subscribe to my channel. The final point is that me and my family own nearly 30% of our portfolio is now in gold and silver. We have done this. We have increased it in the last few days. We have been having gold and silver as a part of our portfolio for more than 1.5 years, but we have been increasing it in the last 1 month, and we have accelerated in the last few days. And I will continue to buy this on every decline or any calendar date or whenever we get money into our fund. So our focus for our fund, family-owned funds, will be on precious metals for this year going forward. And I'm hoping that this will beat equity returns, what we saw in the last 1 year. So as I keep saying, please do your own due diligence. and I'll come back tomorrow morning with more news and views on the Asian markets and the market going forward. Hope you have had a good weekend, and take care, and see you tomorrow morning. Thank you for joining me here, and goodbye.